Let me do this disclosure. I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I added FTCH today and a very little bit of pins. Actually, very small for both of them. Very small for both of them. All right, let's hop over here to the chart. Snap getting smizzoked after hours. I don't want to trade this here. All right, I'm not supposed to say from a compliance perspective in an afternoon meeting if I'm trading anything or what I'm trading. So that is all I will say. But yeah, those numbers not looking good. And the no guidance thing is not good. Oh, I just forgot about something important too. And a wrecking this snap down here, at least initially. There's just a monster refreshing seller on the offer, $12.80, $12.77. Selling on this is massive. That lifts though, there could be a real sharp pop. 880, 1280 just dumping on edge A. NASDAQ broke. See if there's any follow through. 10 cents of follow through. There we go. There's a little follow through. See what the selling looks like at 13. There looked like there was a lot of 13 selling there. Pins down, solid, meta down. Boy, we've seen this before. If you're a newer trader, I highly recommend that you don't trade these earnings names here after hours. Extremely risky. Certain order types don't work. Stock's getting absolutely pummeled here, down 18%. Not great news. They couldn't break that 13 on the upside there. 69 selling hard now. We're selling this thing all the way down. What are these recent lows of this stock? $11.88. Big support down at 12. And this is after they had like pre-announced that the numbers were going to be bad, right? Just a couple months ago in May. And it's still getting smacked. 65 cents dumping. Wow. Well, I think it's the lack of guide. I didn't really fully look at the number there. Doesn't look good, but I think it's the lack of guidance, right? Scaring this market off. 1250 dumping stock. Arca. Just 20,000 share seller jumped in front of it on NASDAQ. Looks like he's resizing that offer. Never a good sign. They cleared it. See what kind of pop this thing can give. 71, 74. The NASDAQ futures trading down. Where do we close? Yeah, trading down a couple dollars. It's crazy how Snap moves the entire stock market. Like the only degree of capitulation I've seen in this entire bear market is May 24th when Snap came out with that early warning. That morning, that day, we had, for like that hour and a half or so, we had like the only heavy selling that really seemed like it was like capitulatory type trading price action to me was that day. We're below those levels, right? $12.55 was the low that day. The absolute low got down to $11.88. I'm really impressed by how bad this thing is trading, considering that they had warned already coming into this. There's new after hours lows here in Snap. Well, for the most part, we had a really boring day. I'm going to keep an eye out of this out of the corner of my eye. SPYs closed, so including the after hours session, where SPYs are down over $1 after hours. So as of right now, SPYs are only up 0.7% on the day. Which is not great. Wow, that 12 seller is crazy. Qs here trading down a couple points after the close. So it's only 0.75% on the day if you include the after hours down move. And IWM a 0.25%. Massive offer came in on that snap on ARCA. The seller, somebody is like liquidating. A couple 100,000 shares there came in on that offer. They printed the entire thing and they offered and break at $12. Stock's off 25% now. Whew. It's really bad. 12 is just still dumping stock here. Still team moving after hours on this? Jeez, Snapchat's moving the bond market. You kidding me? Snapchat's moving the U.S. Treasury market. Yeah, so that Snap wrecked the entire market on that pre-announcement that they had done there. They finally broke that 12. You need to see some upside follow through on the break of that 12. That was bonkers. So yeah, obviously things are still developing here in front of us. I don't really actually have too much to talk about today because it was kind of a similar setup this morning to what we experienced yesterday, right? We had a very flat open in a market that's a little bit extended to the upside. The short-term tactical sentiment was, still in the red zone, but had kind of cooled off a little bit. So that kind of tells me you got to be very cautious on your buying, very cautious on your new longs. But the flat open today is still not what I wanted for shorts. If we could have gotten a solid percent plus gap across the board on the upside, then I would have been looking to short that. But instead, what the market did, and it really did this 2 days in a row, so it's interesting to me, is we spent the entire morning still cooling off price action. And I remember thinking when we started to break higher here at noon, right, kind of a random time. I remember thinking when we started to break higher at noon, like, I wonder if this half of a day of rest is enough to like satisfy that short-term tactical sentiment indicator where there's enough momentum in this market where now the market's actually going to go and give continuation even midday, which actually, even as someone who is kind of on the bull side of things, it's really not what I want. I don't really want continuation today. I would have much preferred this noon breakout where we got back above 396 in the SPYs. I would have much preferred that to never happen. And I'm going across the board. I would have much rather the market stay kind of between 396 and, I don't know, 394, 393, the whole rest of the day there go sideways. And the reason for that is that it would just give us much better setups for tomorrow if you're bullish. If you're bullish, you don't really want the market to go straight up like it's kind of been. Again, there's been some intraday rests yesterday morning and an intraday rest again this morning. But for the most part, that's not what you want if you're very bullish, because it doesn't give you the setups, right? We want a good, healthy market that's grinding. Maybe volatility continues to come down a little bit. And I want a market that's going to give rests and give bull flags or give inside days that can give us further setups for tomorrow. So this was another trading session where there wasn't really too much to do except for look for relative strength and relative weakness. And that's kind of what we did. I had like a very hands-off type of trading day today. There was just nothing that was getting me too excited. It took a couple little day trades. I really didn't take anything on big size. FTCH was a good one. It's the third day up in it, and I really don't like buying stocks on day 3. But this thing was getting hit with some really impressive bull flow early on. So putting this little shooting star here at 940, and then it pulled back into the equilibrium zone, and I basically was just kind of anticipating that it was going to hammer off of that, and I was utilizing initially the second bar of the day as my stop loss, and the bull flow that was coming into the options market is kind of a layer of probability. And we got to pivot exactly where I was looking for it, got an upside move, got my risk covered, booked a little extra profit, then it did nothing all day. I just sat in my position. Why? Because buy the ticket, take the ride. And eventually this thing closed on highs. So I decided to keep a very small amount of stock. I didn't really have a ton to begin with because I didn't consider this to be any sort of highly rated trade. The reason I didn't consider it to be a highly rated trade is because I'm buying a day 3. And like I said in the morning meeting today, I don't like buying day 2s, let alone day 3s. But for, a little day trade, try to put a few dollars in my pocket, fine. And then, you know what? It closed well. I got a good enough of a profit cushion. I'll keep a little bit. Fine. Some other stuff I traded today was maybe not as great. Neo, I was kicking myself immediately off the open for not. I said in the morning meeting today, so Neo had an inside day yesterday. I'm interested in it above yesterday's high, and 20 is this clear, obvious support. But I was like, I really don't want to buy 20 after it's tested it 7 times, and I haven't been in this thing to the long side off of 20 at all. Am I going to buy it the 7th time? Right, is this probably going to break support? It's almost starting to look like a better short than a long off of this 20 area, because every time the support level gets tested, there's a higher probability of a breakdown. And then, of course, I didn't buy 20 again, which is probably the right thing to do. It's the disciplined thing to do at this point, to be consistent and consistently not make money off $20 in Neo. And then I'm kicking myself a little bit because this thing just absolutely exploded off the open. Fine. I can't buy this break. I wanted to buy the break of the inside day high. I can't buy the break of the inside day high on the 3rd bar of the day when the thing just ripped 90 cents in 11 minutes. That's just not giving me a good risk reward. I'd have to give it all the way down to lows. No interest in that. But then Jerry called out. Jerry made me the money, I think, in that FTCH also. So shout out to Jerry for today. I owe you a beer, sir. Even though I didn't make any money in Neo. So just a beer. Then Jerry called out this Palantir, that's right, which is a break-even trade for me. Now I take all my beers back, Jerry. I'm just kidding. I'll still owe you a beer. So Jerry calls out this big doji here into the equilibrium zone, and it's still even honestly a little bit more risk than I want to take. But I decided to take a little bit of stock anyway, just because it was so strong off the open. I like the stock. It did pivot where I wanted to. Just a lot of risk because the size of the candle is pretty wide there. But I scooped a little bit of stock, I think in the 2080s somewhere versus this low. I had like 25 cents of risk, something like that. The move here above $21 was enough for me to cover my risk. Never got the trail, get stopped out. So more or less a break-even trade. Another break-even trade that I did have was this Palantir. Palantir got a big upgrade this morning, up to $20. I don't really like this as a company, but I'm not afraid to take longs in companies I don't like if it can make me a few bucks. You got a clear level here around this $10.25. The thing I don't like about it is it's day 2, but the fact that it got a really juicy upgrade, I think can potentially mitigate the fact that I have a worse risk-reward and probability of success by buying a day 2. Off the open, first part of the day immediately looks good. The volume here is great, significantly more sizable than like yesterday's opening candle or closing candle. So I'm like, okay, got great volume here. It's breaking through the level. So you know what? I'll buy some. I don't remember what price I got, but it was a pretty good price versus lows. I think I had 10 cents worth of risk, something like that, less. Got my risk covered on this one. I didn't sell anything else to make it a winner. So when I eventually got stopped out and this thing pulled back and broke the opening low, it was just a break-even trade. I perhaps could have had a little bit less greedy of a game plan and maybe made a couple bucks in it. But that's the thing about tier sizing, right? Since I don't have a ton of conviction in this trade, or even the Neo trade, or even the FTCH trade, I'm not taking like A plus tier size. I'm just taking these trades because they're trades where I think I can have a little bit of an edge, put a couple dollars in my pocket. But the downside of a lesser tier size is when my trade's running for me and I don't have that much stock, do I want to sell some extra stock there? Do I just hold all of what I've got because it's not a sizable position, just to try to ride a trend? And that's what I figured I would do, but this thing never trended. So if I was heavier, I probably could have gotten another sale or two up near highs, and that would have made it a small winner for me. Instead, I wasn't heavy, so it was just a break-even trade. This snap really can't get out of its own way. It almost got up to 1250 there. I don't even think it really tested 1250. Now it's back towards 12, still with big sellers coming in. So yeah, so that was the Palantir trade. So again, just basically a bunch of break-even trades for me today. And Fitch made me a couple dollars, and then the Bed Bath & Beyond was nice. This thing down after hours? We're already down 20 cents after hours. I guess the whole market's trading a little bit lower. Yeah, but Bed Bath & Beyond, came out with that 13G it was. Someone took a 6% stake in it. So this thing gave a nice little bid. I called out the uptick in this thing real fast when the volume was coming in there. And then Josh got us the news. Gosh, man, that's such a bad headline. Where are the executives of this company? So Josh just said, forward-looking from Snap. Forward-looking visibility remains incredibly challenging. Unclear how Q2 headwinds will evolve through Q3. I mean, this almost just sounds like bad management to me at this point. How are you guys not going to give us anything to go on here? I don't know. Real crazy. Snap just getting wrecked off 22% right now. How many times is going to happen for this stock? Bringing down the entire stock market, even moving the bond market. So anyway, I mean, that's it. It's really all I had to talk about. We kind of reviewed the market, only giving a half day of rest and then continuation. Couple little day trades to try to put some money in my pocket that were decent, but not really anything to talk about. And honestly, the most exciting thing of the entire day is happening here after hours while we're doing the meeting with Snap. So, we'll see. This is obviously a little bit of a game changer here for the market too, because the whole market futures are ticking down on this. I kind of feel like the Snap sell-off is a little bit overdone, but at the same time, when I read a headline like what Josh just posted, maybe it's not. And then the real question is, like, should this be negatively impacting the entire market? Should this really be negatively impacting Google and Facebook, Pinterest? What are their business models going to look like? Or is this a warning of future earnings reports that we're about to see from these other companies the rest of this earnings season? I'm on my initial thought process without having done any significant research at this point. I'm kind of in the camp that this is a bit of a one-off here, but you can make the argument for sure that this market has had too big of a run here and just needs any reason to be able to pull back from this really big 3-day move. So we'll assess the gap tomorrow morning. Looks like we'll probably be gapping down, and we'll assess whether or not that is viable or not. We've talked about the layoffs. I'm just seeing out of the corner of my eye, Dan saying, isn't this a combination of things, all of those layoffs, etc.? I don't know if Snap announced any additional layoffs here with this report that I saw, but as far as the other companies go, I don't view that as terribly significant at that point, and it has seemed to me like it's been priced into the stocks. We're seeing Google come out and saying they're doing a 2-week hiring freeze, and the market briefly downtick. Microsoft came out last night and said that they're slowing down hiring. But the flip side of that, so it's probably bad for some of these individual stocks. The flip side of that is it was just a month ago, and I know we chatted about this a little bit earlier today, that we were discussing that one of the problems that is leading towards inflation fears is the fact that there are 12 million outstanding jobs and 6 million job seekers. So we had seen, or I had seen some data that I've commented on. Again, this was dated a little bit now, a month or two ago, that made a strong case that if the outstanding job openings could just get reduced from 12 million with 6 million job seekers to 10 million, that would actually be a good thing. It's still a very healthy employment market, right? Um, it's still an employment market where people looking for jobs have a strong advantage, but it's not so crazy that you have to be worried about the wage spiral discussion that leads to significantly further inflation. Gets people to tighten their belt a little bit. I mean, it's almost like, not that I'm necessarily in this camp, but it's almost like the soft landing camp that the Fed has talked about, right? They keep saying, we're raising interest rates to combat inflation, but the job market is so good that we can handle this, the economy can handle this, and we can, potentially engineer a soft landing as opposed to like a really hard recession. Well, that's the soft landing argument. You want to see some job slow down, and that's not necessarily a bad thing for the market, especially if it's already priced in, because we're in a bear market. The average stock in the Nasdaq is down over 50% at lows. So that's kind of the flip side of that data. So I haven't viewed anything that I've seen as massively damaging. And then you've got other areas. So maybe these layoffs and slowdowns are confined to tech, because you got other areas like airlines, where they're doing anything they can to hire. They're still increasing wages. They're desperate for pilots. My buddy is working on becoming a pilot right now, and he was texting with me a little earlier that NetJets just lowered their requirements for starting pilots, and their starting salary there is $100,000 for an entry level starting pilot to go to NetJets, and they're lowering their requirements because they desperately need people to work. So it's certainly a really interesting market environment, but at least for the moment, it's all about Snapchat here and how Snap's continuing to move the market. All right, let me scroll up into the VTF here and see what, if anything, I missed. A lot of Snap, Google, Meta commentary here in the VTF, obviously. I thought there was an early comment or question from Steve, maybe, that I no longer see. All right, so I'm at 4:15. So if anybody put in a question in the VTF prior to 4:15 p.m. Eastern, just please recopy and paste it because I missed it. All right, first thing I'm seeing is actually Dan's question, which I already answered. From Denver, Steve here. Understanding that after hours trading is tricky, curious if you think maybe a good time to buy things like pins, Snap, if the impact is overstated. My initial thought process on that is yes, Steve. But my secondary thought process on that is that I am very scared of the language that. All right, just gotta fix something here. I really don't like the lack of guidance, and I really don't like where was that comment that Josh had posted? This forward-looking visibility remains incredibly challenging. Unclear how Q2 headwinds will evolve through Q3. What do you mean? It's unclear. Like that's your job to give that visibility to shareholders. Like that's kind of mind-blowing to me. You should have an understanding. You should be able to give at least some sort of conservative guidance. Like that's horrible language. So my initial thought process is yes, that this is a little bit overdone here, especially given what I was already saying earlier. We can go back to the chart. The Snap earlier warning in May, like we were already expecting bad numbers to kind of come in, but this is so again, on the one hand, that language is very scary to me. I really don't like that. Otherwise, outside of that, on the surface of things, I'm inclined to think yes, at these prices that we're finally at, I do have an interest in these companies, in Pinterest, as an example. And honestly, even in Snap at $12. Luckily for me, I got out of my Snap swing trade yesterday, didn't hold any into the report. Almost surprised. I'm almost surprised I didn't hold any to the report. If it's a disaster, you would expect that I would have some. Next thing I think I'm seeing here is from Sean. I'm still trying to figure out how and when to use volume in tandem with technicals to take a trade, either short or long. Can you give a more in-depth discussion on volume and trading triggers? I know the hammer and high volume bar off lows, but are there others? Yeah, so I mean, we say volume is confirmation. So I mean, that's pretty much it. You know, just keep it simple. Like I said with the Palantir trade for myself this morning, even though the trade ended up failing, the very high opening volume was confirmation that there was momentum coming into the stock that is potential to give really big follow through. If the volume in the open in Palantir was like this average volume that it typically does in the beginning of the day, which is like 1 million shares, then I probably wouldn't have bought the stock. But look at this. The volume was 3.3 million shares, you know, over 3 times like what it typically is giving you on an opening candle. So that shows you that something's going on. And you can tell it right away, like right away. I feel like I bought this thing. I don't know what time I bought it, but I probably bought it like 9:32, something like that. And I feel like it had already done yesterday's opening volume by 9:32. And for me, it's like, oh, this looks like something's going on here. There's momentum that's coming in. And again, especially if you're buying these things on a day 2, how are you going to get paid? You're going to get paid by momentum. So that's what I want to see if I'm kind of buying anything. Like I'm only buying things today if I think that there's other layers of probability on my side, right? Like look what I was involved in. Palantir, it got upgraded. It's got the big opening volume. I got a couple great layers of probability that are there on my trade. Or the FTCH, nothing super special on the volume here, but the other layer of probability was the option flow that was coming in. So that's kind of what drove me to potentially get involved in that trade. So every technical setup has a corresponding kind of corresponding volume that goes with it. Like a bull flag is an example, or a bull pennant has big opening volume, lower volume in the rest, and then bigger volume coming in on continuation. So again, what we say is volume is confirmation, or a breakout candle. That ignition bar should be confirmed by very high relative volume. It's confirming that what you're seeing is accurate. It means that you're going to have a higher probability of success in the trade. So hope that helps, Sean. From TG here, do you think Snap is 33 PE is still too high? Hard to say without any forward guidance. And that is why it is selling the way it is. I think that the problem is that people have no idea how to value stocks that aren't giving any guidance. They got away with that a little bit during COVID. There was a period of time. So my entire trading career, whenever you saw a company not provide guidance, it usually meant that something was seriously wrong. So my entire career, if you got an earnings report that comes out and they're like, yeah, we're not going to report guidance because we're scared to, or the uncertainty, whatever, the stock always would get murdered. And that was one of the interesting things that threw me off post-COVID low. Right. Well, exactly. Well, Shale, that's the post-COVID low. So all of a sudden, the post-COVID low comes in, and every single company, it seemed like, was not giving you forward guidance, and they were using COVID as an excuse. There's so much uncertainty around COVID that we cannot give any appropriate guidance. Like even Apple, right, wasn't doing it, and that was mind-blowing to me to see these stocks go up when they weren't giving any guidance in that period of time. That was an exceptional period of time, right? The Fed was really supporting the market. Exactly, Blaine. It was all about the Fed. The Fed was totally supporting the market, and people were just buying everything. And eventually, what that led to, as we all saw, was a bubble. It was a total bubble at the end of 2020, early 21. So, yeah. Now I think we're getting past that period of time where you can't not give forward guidance anymore. COVID's not an excuse anymore. Even if the recession that we're seeing right now, or the bear market that we're seeing right now, it really is because of COVID. It's like a COVID hangover, because all the Fed did was delay the stock market and economic weakness. That's all they did. They didn't get rid of it. We're just seeing it now, right? Through inflation, through the supply chain economic problems that we're dealing with. That's all the Fed was able to do. But at this point, even as this reckoning is kind of coming, these companies should be able to give forward guidance. This is ridiculous. The staff's not giving any forward guidance. Ridiculous. And that's why I think this thing's getting wrecked more than anything else. But I gotta take a look. Yeah, exactly, Jay Don. Exactly. That's what I was just saying before. Like, you now I think you hit a point here with Snap where you need some activists to come in and say, hey, this management's not going right. But I don't know. Most of these types of tech companies, when they go public, I don't know the corporate structure of Snap. But like I know how it is with Facebook as an example. I think Facebook was the first one. They've made their corporate structures in such a way where it's almost impossible for an activist investor to come in and boot out the CEO. That you can't get the power because of how the voting rights are. So yeah, and I do also think from Mango's comment here, it seems like TikTok is really eating everybody's lunch. And that would be the social media company, of course, depending on price, that I would actually most interested in being long. I want to be long TikTok, and I wouldn't be surprised if TikTok is actually like underreporting their numbers because they want to go public at some point and still be able to show massive amounts of growth. They're just eating everybody's lunch right now. All right. Looks like I got through it all. Again, there wasn't really much to talk about from today's action. Everything seems to be coming here from after hours with this Snap. But I'm going to wrap things up here then. Oh, never mind. We got one more from Charles. Can you discuss how you do the spreadsheet that you use to track ongoing new add back trades? Sure. So, especially when I'm at my apartment here in Manhattan, I don't have a lot of screen space, so that's why sometimes I'm just on the radio and not doing the screen share. And then usually we have Pat on the radio into the close. And honestly, one of many reasons why I like having Pat on the radio into the close is because I can just focus on updating my spreadsheets in the last like 12, 13 minutes, which I typically need to do. So when I'm on the radio now, because Pat's on vacation, I have to turn my screen share off, and I probably get a little bit quiet for those minutes because I'm updating my spreadsheets. So it's really straightforward on what I do. It's just that I'm in a lot of positions, so I can't commit it all to memory. I'm in 17 swing positions tonight, so they all have their game plans and their continuous trades. Like tomorrow, I'm going to pick up on the trades exactly where I left off on them today. And my game plan says that I should sell certain stock in certain places, trail certain stock in certain ways, and potentially add back certain positions, certain stock that I had sold at other prices at specific prices based on pullbacks. So some of what I do, especially like I've talked about in the past, like kind of trading around a core position for cash flow, a lot of that is very set as far as where limit orders need to go. And I just need to kind of mark down into the close exactly kind of where I left off, so I know where to pick it back up in the morning. And then I'm also going through my spreadsheet to see, like, if we're going into the close and I'm supposed to sell stock in, I don't know, Apple 10 cents higher than where it's trading or something like that, and there's less than 10 minutes left, I'll bring my offer down 10 cents to try to get this sale into the close, just to take the risk off, because it's not worth keeping that piece of Apple overnight to try to make an extra 10 cents when the whole thing could potentially gap against me, or whatever. So I'm going through the spreadsheet. I'm updating every stock that I'm in based on my game plan, but I'm also saying like, okay, like I need to cancel this offer in Apple. I'm gonna go inside offer instead. Try to get this stock off, take this risk off, and then if I get that fill on the inside offer, which typically I will, because I literally will like peg down inside offer to a certain degree um, until I get the fill, and then I need to update the spreadsheet again to reflect the fact that I sold that piece of stock also. So that whole process, takes me that 12 minutes or whatever it is um, into the close each day. But it's really very straightforward. Like I'm not doing anything advanced here. It's as straightforward as just knowing where you know I am in my game plan, knowing which again that's a pre-thought out game plan ahead of time, and that's it. Do you count the cash flow trades towards ongoing averages? Um, yes and no. So no, that's the no part. Not average price. I don't look at average price. I think that average price is super misleading, especially if you trade actively. Like one of the things I've spoken about in the past, forget about my trading for a minute, is taking ads in trades. Like a very common question I get from people is, Derrick, I'm in my trade, it's working out for me, I'm long, I want to be able to add to it. How do I add to it? And my first answer is maybe you can't. My second answer is the way that I want to do an ad, which is different from an ad back, is as an entirely separate trade. So maybe I'm long a stock from $20 and it's working out really well. And now at $22, there's a bull flag, and I want to trade the bull flag. So I buy 1,000 shares at 10 cents risk, and I'm risking $100 on that. And the trade fails, and I get stopped out. Am I going to let that trade mess up the fact that I've already got stock $2 in the money? Because think about what average price just did. I decided on the second trade, I'm going to risk $100. I'm buying 1,000 shares at 10 cents worth of risk, and I just got stopped out. I just lost $100, but because of average price, the execution on that order might have a positive sign next to it. It might say, hey, you just made money on this trade because even though you just sold this 1,000 shares here for a 10-cent loss from where you bought it, it's still above your average price on the trade, so you just made money. I think that's super misleading. I prefer, and if you do the math, the accounting is the exact same. Um, I prefer to keep them as two separate trades. I have my first trade that's paying me really well and a couple dollars in the money. I took this second trade. I just lost $100 in it. My average price is all messed up, or what it says whatever it says. I know that my other stock that I have is at $22, so just make note of that, and I have a game plan based off of that. I would never let a 5-minute bull flag trade exactly, Charles. I would never let a 5-minute bull flag trade at a $2 higher price that fails where I risked it $100 and lost it, negatively impact the fact that I might be up $2,000 on a trade that's 2 points in the money. I'm not gonna like liquidate the entire position or change my game plan on a trade that's working. So that's why I always say it might as well be two different stocks. It might as well be two completely different symbols. It just so happens that there's a separate trade here that's in the same stock. So for me, if I'm having a core position and I'm scaling in and scaling out and I'm doing some cash flow trading and trying to put some money in my pocket as my trade works out or doesn't work out over time, I'm not paying attention to average price. I know where I'm in from. Now, the one thing that I actually do sometimes take into account, maybe I shouldn't, but I do, is the opposite actually. The money that I've made from cash flowing the position can potentially mean that I could give my core position more downside room, if that makes sense. Right? Like maybe I'm long this position and I'm well in the money, it goes all the way down against me. I know where my stop loss is. But maybe during the course of that process, I made an extra $1,000 of cash flow. And in that case, I could take that $1,000 and give my core position, if I wanted to, even more downside room to stick with it and stay in it if I believe in it. I've had a thought process that what if I could make, and again, this is just more hypothetical than anything. What if I could make enough cash flow on a position where I could have a core position and literally hold the thing to zero and still make money in it, right? Like that would be like really cool. Um, because even I've made so much just trading it back and forth that even if this thing went to zero, I would still be positive in it. And then I could keep this core position now potentially forever if I wanted to, and just kind of continue to trade around it as long as the math works out where I would never lose money. We actually is one that I've kind of done that in. I've done really well overall trading in we, where honestly, the stock is down like 50% from where I initially bought it from, and I don't know off the top of my head exactly where my P&L stands with where it is today, but I think I'm positive in the stock, even as it's down like 50% against from where my first buy was. But that's like what I'm constantly trying to like compute is that math. And that's that's a spreadsheet that I've created on my own. But again, it's really very simple. It's really very simple. I just keep track of, where the stocks are supposed to be, and then I have another tab on the spreadsheet that's basically keeping track of P&L and where my P&L is, what do I want to do with it, and then that can allow further complexity to game plans because then I can start to actually give it even kind of more room on certain things if I wanted to, if that makes sense. Yes, Charles. Yes, exactly. Cool. No problem. All right, then. I'm going to wrap it up here. Yeah, and that, sure, Steve, and that's even going back to what I was saying, yesterday's afternoon meeting, right? Like, I'm in this win-win situation. I think I said yesterday at the close that between the previous day's close and that trading day, I'd taken off like a fifth of my overall loan portfolio and just put that money in my pocket. That kind of goes back to exactly what we're talking about here. Like that's money it's in my pocket. I can potentially buy that stock back if I want to, if it pulls back. It's money in my pocket, but I still have enough on where if we had the opposite situation here happening with Snap and the whole market was moving higher on it or whatever, I could continue to get paid significantly more. And it's crazy how heavy the Snap is. There's still massive sellers in this thing. This $12.10 right now is dumping. They're putting a lot of pressure on this. You can even like see this kind of like bear flag here. Look at this 5 minute after hours. Look at this. These highs all look like they're the same. 1236, 1236, 1236, 1235. So there's clearly a refreshing seller there at like 1235, 1236, something like that. But just holding and holding and holding and holding. And maybe that's the seller I'm seeing right now, $12.10, stepping down. I don't know for certain. Yeah, just bonkers how much the Snap is down right now. All right, I'm gonna jump. Have a great night, everybody.